Okay, let's unpack this. Today, we're diving into a topic that, well, it underpins a huge part of global commerce, the tax avoidance service market. Our deep dive today is powered by insights from the 2025 Global Edition by Cognitive Market Research. And our mission, really, it's to pull out the most important nuggets about this market's impressive growth and its fascinating regional dynamics, giving you that critical shortcut to being truly well-informed. We'll look at what's fueling this expansion, things like ever-increasing regulatory complexity as companies rethinking their global structures, and their smart strategies for diversifying finances.
Yeah, and what's fascinating here is just the sheer scale and trajectory of it all. Really, if you look at the global picture, this market brought in nearly, what, $7.5 billion back in 2021?
Hmm.
And that's not just a steady climb. It's projected to hit over $9.6 billion this year, 2025, and then really soar to almost $16 billion by 2033. That's a pretty robust global compound annual growth rate, or CAGR, of 6.5%,
Hmm.
which, this raises an important question for us and for you, the listener.
Yeah.
Where is this significant growth actually coming from around the world, and what does it tell us about the global economy?
Absolutely. That global figure is eye-opening. And maybe just to be clear for our listeners, when we talk about tax avoidance services, we're not talking about anything illegal here. Not at all.
Right.
We mean the sophisticated legal strategies companies employ to optimize their tax liabilities, often involving expert advice on navigating complex international tax laws,
Yeah.
managing transfer pricing, between different parts of a multinational, or strategically structuring their global operations efficiently.
Exactly. It's about navigating the rules smartly.
So, okay, let's dive into that regional breakdown then. Starting with a major, well-established player in this space, North America. What kind of contribution is that region making to these global figures?
North America certainly holds its own, a significant market, no doubt. It generated around, let's say, $1.5 billion in 2021, and we project it to climb to over $3.1 billion by 2033. So it's maintaining a steady CAGR of about 6.2%.
Okay, steady.
The United States, as you'd probably expect, is the dominant force there, makes up the largest share. Its growth is largely driven by, well, ongoing corporate tax reforms and companies constantly looking for new financial optimization strategies within that changing landscape.
Right. So the U.S. is the anchor, but what about its neighbors? Canada, Mexico, are we seeing similar patterns there?
Well, interestingly, Canada actually shows even stronger momentum. Its market is projected to almost double by 2033. That's a CAGR of 7.4%.
Oh, okay. Higher.
Yeah, which suggests a particularly dynamic environment, perhaps due to evolving domestic tax policies or, an increase in international business activity there. And Mexico isn't far behind either. A remarkable 7.5% CAGR,
Wow.
which indicates, I think, a burgeoning demand as more global businesses look to establish or expand operations in that market and they encounter new complexities.
Okay, so that's a clear picture of robust, albeit varied, growth across North America. Now, let's shift our gaze across the Atlantic, Europe. This region often faces different, maybe more layered regulatory challenges, especially with the EU. What are we seeing there?
Europe presents, a nuanced but very substantial picture. The market there was valued at over $1.7 billion in 2021, and it's forecasted to exceed $3.5 billion by 2033.
Still significant growth.
Definitely. While the United Kingdom shows strong growth, Germany truly leads the pack in Europe. Its market is projected to almost double by 2033.
Germany, okay.
Yeah, which highlights Germany's position as a major economic hub with, intricate tax demands. But what's also notable is that the rest of Europe segment, it's growing at a promising 7.4% CAGR.
That is interesting.
Right. It signifies that beyond the traditional powerhouses like Germany or the UK, there are significant opportunities, increasing demand for these services in other European economies, perhaps driven by new EU-level tax efforts, or maybe companies navigating post-Brexit complexities.
Okay, got it. Now, here's where it gets really interesting, according to the report. Asia Pacific. The source material highlights this as the fastest evolving region. Given the scale of global business shifting eastward, what's behind that claim?
Oh, it's an absolute powerhouse of growth, currently the largest regional market, actually. Asia-Pacific saw sales revenue nearing $3 billion in 2021.
3 billion. Wow.
Yeah, and it's projected to hit a staggering $6.17 billion in 2033.
Huge jump.
Huge. China, without a doubt, leads the region. Its market is essentially doubling over the forecast period. But India and Taiwan also show remarkably robust growth rates, nearing 7% and almost 8% respectively.
Okay, broad-based growth then.
Very much so. And it isn't just about the sheer volume of new businesses.
Hmm.
It reflects a surge in cross-border investment flows, rapid digitalization,
Yeah.
and the increasing sophistication of companies navigating diverse regulatory environments across countries like Japan, South Korea, Australia, and that thriving Southeast Asian bloc.
Right.
Just think about, say, a tech company expanding across 5 new Asian markets.
Mhm.
Each one now requires dedicated, nuanced tax optimization services. That's what's fueling this demand.
Makes perfect sense. Okay, moving south from there, let's transition to South America. We often hear about shifting political and economic regimes in this part of the world. How does that translate into the growth trajectory for these services?
South America indeed shows steady growth amidst those shifting regimes. The market was valued at around $427 million in 2021, and it's set to reach approximately $850 million by 2033, so essentially doubling.
Doubling. Okay.
Brazil, in particular, is a key driver there, nearly doubling its market over this period. Countries like Argentina, Colombia, Peru, Chile, they're also maintaining steady growth rates, kind of in the 5.4% to 6.5% range. This demand is underpinned by both the evolving tax landscapes within individual countries and, crucially, the increasing presence and expansion of multinational operations needing to adapt their global strategies to local nuances.
Got it. And what about the Middle East? How dynamic are those trajectories, especially with the region's, economic diversification efforts we hear so much about?
The Middle East is definitely a region with diverse and dynamic growth. It reflects its ambitious economic visions. It's set to grow from about $434 million in 2021 to over $1 billion by 2033.
Another doubling.
Yeah, pretty much. Saudi Arabia is particularly strong. An 8% CAGR shows a rapid increase in demand, likely tied to its significant investment in new industries and business hubs. The UAE also shows a strong projected CAGR, 7.7%, consistent with its role as a global financial and trade center.
Right.
Other countries like Turkey, Egypt, and Qatar are all showing high growth trajectories too. However, it's worth noting, the rest of the Middle East segment is growing more modestly, maybe around 2.4%. So that might suggest varying paces of, say, economic formalization or multinational entry across different parts of the region.
Interesting distinction. Okay, finally, let's turn our attention to Africa. The source material indicates this continent has the highest regional CAGR, an impressive 10%. That truly stands out. What's driving such explosive growth there?
It certainly does stand out. Africa has the highest regional CAGR and an impressive 10%. The continent's revenue is set to grow significantly, from just under $390 million in 2021 to over $1.2 billion by 2033.
Wow, from that base.
Exactly. This isn't just growth, it's explosive. It indicates a burgeoning demand that far outpaces general economic expansion, suggesting a fundamental shift in how businesses approach tax in these regions. The primary drivers here are Nigeria and South Africa. Exceptional KGRs, both over 10%.
Okay.
This points to, well, perhaps a new frontier for international business, a significant wave of new international investment, and also local businesses rapidly scaling up and suddenly needing sophisticated tax strategies where perhaps none existed before. Even the rest of Africa, while showing slower growth at 6.5%, still reflects a clear upward trend in the adoption of these tax planning services across the continent.
So what does this all mean then? When we put all this regional data together, it's clear this is a rapidly expanding market, but what's the big takeaway for our listeners?
Yeah, if we connect this to the bigger picture, it's clear that the global tax avoidance service market is evolving rapidly everywhere. The varied growth rates we've discussed, they're shaped by specific regulatory landscapes, unique economic dynamics, and the strategic financial planning needs of businesses in each area. It's sort of a constant game of adapting to change.
Right, constant adaptation.
Fundamentally, as tax complexities continue to increase globally and as companies undertake more corporate restructurings, diversify their financial strategies, the demand for expert services that help them minimize liabilities legally within the bounds of the law, it just continues to expand. This truly consistent market growth really underscores how deeply integrated tax optimization has become into global business strategy.
That's a truly comprehensive and insightful look at a complex and growing market. And remember, all this information is directly sourced from the Global Tax Avoidance Service Market Report 2025 by Cognitive Market Research, distilled down for you.
And, this raises an important question for you to consider, maybe mull over. How does this persistent and, in some regions, really explosive growth of the tax avoidance service market reflect evolving global economies? And what might this imply for international cooperation on fiscal policy in the years to come, as governments and corporations navigate this ever more complex landscape? Something to think about.
Welcome to the Deep Dive. Today we're taking a closer look at a topic you hear about a lot, but maybe don't always get the full picture on the tax avoidance service market.
Yeah, it's definitely one of those complex areas.
Exactly. So our mission here is really to cut through some of that noise, give you a clear, well-informed view of how global businesses legally optimize their finances.
hmm
We're pulling our insights from the tax avoidance service market, trends and transformations. That's research by Cognitive Market Research. The goal is simple. Unpack the key drivers, the challenges, and the, frankly, incredible transformation shaping this whole area. So you walk away really understanding it. Okay, let's unpack this.
Okay, and right away, I think it's really, really crucial we make a distinction here. Super important.
Go ahead.
This deep dive, we're focused squarely on legal tax minimization.
Okay.
We're talking about sophisticated, totally legitimate strategies companies use to enhance their post-tax profits,
Right.
all within the bounds of the law. We are absolutely not talking about tax evasion. That's a different beast entirely.
Good clarification.
And what's fascinating right from the start is just how intricate that balancing act is for companies.
Yeah.
Striking that balance for legal optimization.
That's a crucial starting point, absolutely. So, okay, let's dig into the big question then. Why are these kinds of specialized tax services becoming so, indispensable for businesses all over the world? What are the main forces pushing this market's growth?
Well, the number one driver really is the growing corporate interest in legally reducing their tax obligations. It's pretty straightforward in a way.
Mm-hmm.
The report we looked at, it highlights how companies are using structured methods, things like transfer pricing.
Okay, maybe a quick refresher on that.
Sure. So transfer pricing, it's essentially how multinational companies set the prices for, say, goods or services or even intellectual property that they exchange between their own subsidiaries located in different countries.
Ah, right. Within the family, so to speak.
Exactly. And it's powerful because it lets them strategically allocate profits, shifting them towards lower tax jurisdictions. Then, separate but related, you've got direct profit shifting itself again, moving profits to places with better tax rates.
Okay.
And also treaty-based tax planning, which is all about leveraging the huge network of international tax treaties that exist between countries.
Got it.
All these approaches, they're designed specifically to boost those post-tax profits.
Yes.
That's the end game. And that's why getting expert advice here is just invaluable now.
So it's really more than just saving a bit of cash. It sounds like it's about fundamentally re-engineering how a company is structured financially for maximum legal gain.
Precisely.
And okay, beyond just wanting more profit, you mentioned the sheer complexity of global tax rules. That has to be a factor too, right? How do companies even start to navigate that maze?
Oh, absolutely. That's another huge driver. I mean, the global tax landscape is just incredibly fragmented. Different countries, different regions, they all have these vast, constantly changing tax codes, compliance rules. It's a full-time job just keeping track.
I bet.
So expert guidance becomes critical, not just for staying compliant, which is table stakes,
Right.
but for finding the smart ways to use deductions, credits, and to strategically set up their operations in those low-tax regions. It's really about turning that complexity into an advantage if you can.
Makes sense. And then there's the constant pressure, right? Companies are always pushed to improve profitability, control costs. How do these advisory services fit into that broader financial push?
They feed directly into what the source calls sustainable financial efficiency.
Okay, what does that mean exactly?
It basically means embedding tax-smart thinking deep into the company's core, ensuring long-term profitability, not just, a quick win.
Right.
We're talking strategies like setting up offshore holdings, strategically registering intellectual property where it makes the most tax sense, even completely rethinking and restructuring global supply chains to optimize the tax outcome.
Wow, so pretty fundamental changes.
Yeah. And if you connect all this to the bigger picture, these drivers, they're really fundamental to how multinational corporations operate and compete today. It's baked into their global strategy.
Okay, so it's clear these services offer, pretty significant strategic advantages. But like anything powerful, it's not without its own complexities and risks. What are some of the biggest hurdles companies run into here?
Absolutely. And one of the biggest, and it's growing fast, is this rising tide of international transparency.
Ah, okay. Like what specifically?
Well, you've got major global initiatives like the OECD's BEPS framework, that stands for base erosion and profit shifting.
Heard of that one?
Right. It's basically a big international push specifically designed to clamp down on those aggressive tax avoidance tactics.
Yeah.
And then you also have serious discussions happening around global minimum tax proposals, trying to set a kind of floor for corporate tax rates everywhere. These changes are definitely, as the report puts it, tightening the grip on strategies that maybe used to be more common or more aggressive. And they seriously increase both the compliance burden and operational scrutiny for companies. They're being watched much more closely.
And what about the risks that aren't strictly financial? I'm thinking reputation. How does public opinion play into all this?
Oh, that's become a massive factor. Huge. Public exposure of tax avoidance strategies, even if they are perfectly legal, 100% compliant.
Yeah.
It can severely erode brand trust. I mean, we've all seen examples where companies face major backlash from the media, from governments, even from their own customers.
Right. Nobody wants that negative press.
Exactly. And it brings up this really important point. The public's idea of what's acceptable tax practice, even if it's legal, that line is constantly shifting. So companies really have to weigh the financial upside against that potential brand damage. It's a serious calculation.
It really sounds like walking a tightrope. And speaking of legal lines, what about that tricky distinction between avoidance, which is legal, and outright evasion, which isn't? That must be a constant worry.
It absolutely is. A core challenge there is the evolving interpretations of law.
Meaning?
Meaning what's seen as a perfectly valid legal avoidance strategy today. Well, tomorrow it could be retroactively invalidated because of a new court ruling, or maybe just a shift in how regulators interpret the existing rules.
Oof. Retroactively, that sounds risky.
It is. It leaves companies potentially exposed to significant litigation and penalties. It's this constant nuanced legal tightrope they have to walk, always monitoring, always reassessing. You can't just set your tax strategy and forget about it.
Okay, so despite these, pretty significant hurdles, the source material notes that the market isn't just sitting still, it's actually undergoing notable transformation. What are some of the more exciting innovations or shifts we're seeing?
Well, a really major transformation is the impact of technology, specifically artificial intelligence and automation.
AI, of course. How's it being used here?
Well, AI isn't just a buzzword in this space anymore. It's being actively used to build these incredibly sophisticated real-time tax scenario models.
So like simulations.
Exactly. It lets companies instantly see the potential tax implications of different business decisions before they make them. AI is also being used to track compliance across all these different countries and even recommend the most tax-efficient structures automatically.
Wow.
It really boosts both accuracy and strategic foresight for businesses. It's moving beyond just manual analysis into actual predictive modeling.
That is a compelling development. And it sounds like there's also maybe a move towards more ethical thinking in tax planning. Is that right?
Yes, the report definitely points to a clear and noticeable shift toward ethical tax planning.
Interesting. What does that look like in practice?
We're seeing businesses making more of an effort to align their tax strategies with broader ESG principles, environmental, social, and governance criteria.
Right. ESG is everywhere now.
It is. And they're focusing more on sustainable governance standards. This isn't purely about optics, though that's part of it. It seems to be also about a genuine effort to show they're committed to being responsible corporate citizens, even when it comes to sensitive stuff like taxes.
So recognizing that how they handle tax reflects on them more broadly.
Exactly. Being seen as a good corporate citizen now extends to tax behavior, too.
Okay. And finally, how are the big shifts in the global economy impacting demand here? I'm guessing the explosion of digital business must be a huge factor.
Oh, it's massive. Undeniable. The growth of purely digital business models, the sheer scale of e-commerce, it's created this surging demand for cross-border tax structuring expertise.
Because money and services are flowing everywhere, digitally.
Precisely. Traditional tax services sometimes struggled with the intangible nature of digital profits, where value is created. So now these services are evolving fast to suit the modern virtual economy. Well, moving beyond just traditional IP migration strategies to more sophisticated ideas like digital royalty optimization, tailored specifically for this global, instantly connected digital world. What's really fascinating here is seeing how these advisory services are adapting, innovating to meet these really complex demands.
Okay, so let's try and bring this all together quickly. We've unpacked the key forces driving this tax avoidance service market. The basic desire to boost post-tax profits, the crazy complexity of global rules, that constant push for efficiency.
Mm.
We also talked about the big challenges, this growing transparency push, the serious reputation risks, and that always tricky line between avoidance and evasion.
Yep, the tightrope.
Exactly. And then finally, we looked at the really interesting transformations happening now, driven by AI, the shift towards more ethical planning, and the demands of the digital economy.
That's a good summary.
It really seems like this market is right at the heart of financial evolution. It's bridging global complexity with tailored strategy, all while juggling legal compliance, ethics, and optimizing the bottom line. So what does this all mean for you listening? It means really understanding these complex, often hidden mechanisms that shape global business and corporate behavior, and just how critical tax strategy has become for, well, pretty much every major corporation out there.
And maybe just to leave you with a thought to chew on, considering how fast AI is moving and this relentless global push for transparency, how might the actual definition of legal tax avoidance keep evolving over, say, the next 10 years?
Hmm.
And what new ethical questions or dilemmas might pop up for businesses trying to navigate this space as it gets even more scrutinized and technologically complex?
Those are powerful questions to ponder, definitely. Well, thank you for joining us on this deep dive into the tax avoidance service market. We really hope you walk away feeling not just informed, but maybe genuinely intrigued by some of these insights.
Hope so, too.
We'll catch you on the next one.